pips. Who cares if the range is really small? But you have to have your expectation calibrated to what the market profile is right now. That means we're in consolidation. I need to see what? I need to see bonds leave, because bonds will qualify whatever the dollar is going to do. I'm going to do a mirror image of it. So bonds broke lower. That means this is qualified as a break in market structure, and it's shifted higher. Fair value gap right there. Let's play devil's advocate and say for a moment, because this is a daily chart, and this is the dollar index, by the way. So if you're a Forex trader, this is the gold mine that you want to be in. Okay, this is where you want to be mining these things from ICT. The things that you think is boring, other people say it's bullshit. This is the stuff that makes you wealthy. This is the stuff that finds consistency and continuity in trading, longevity. You want to be around for a little while, longer than a couple months. Hopefully. It's this insight. This is the stuff that gets you there. Let's say that you saw this happen after the fact. You were working, you were sleeping, you have a business you're running, just couldn't be in front of the charts, and you saw afterwards the day closes like this. The very next day, folks, the very next day, what do you think the bias should be for your analysis? Bullish. Reaching for what? That fair value gap. So between the 17th of May until we got to the first objective, which is that weekly order block here on this day here. So from the 17th of May to the 24th of May, that run here to here, that right there is a sell program in euro. That means selling short. That means every day you're going in with a bias to go long in euro. It's also a bias to go long in pound dollar. It's also a long or buy program for Aussie dollar. It's also a long for New Zealand versus the US dollar. It is a short. I just said that wrong. You like that? I made a mistake there. This is where I wish I could go back and edit it. The dollar's going higher, so it's a short in euro dollar, short in pound dollar, short in Aussie dollar, short in New Zealand dollar, because the dollar going higher. Okay, it would be a long in dollar yen. It would be a long in dollar Swiss. Okay, because we're looking at, this is the dollar index. So if it's going higher, that range between here, by this day, it's after the fair value gap right here. Let me put it in the chart. Yes, my obsessive compulsive is flaring right now. It's all right. It just shows you I'm not AI. I made a mistake. All right, let's see. Extend right. Take that off. Okay, so there's your fair value gap. So after that forms, the next day here, until it gets to your premium array, where's the draw on liquidity? Weekly order block. What's the multiplier if you're a swing trader? It needs to find support here. So that sets the stage for your swing trade. But as a day trader, you don't need that. You're in there before that, which is why I don't do swing trades. I'm using the information I'm showing you here between this here, the very next day, and I apologize if you hear my stomach because I'm fasting right now. The idea of expecting higher prices on dollar index every day until it gets this objective first here, that sets the tone for a bias. That gives you your bias, because that bias is derived from the narrative that's being shown with higher time frame weekly and daily charts, also intermarket relationships, the bond market versus the dollar index, and market profiling. So we are in a consolidation. We have a shift in market structure. How do we qualify that? The range that I told you that bonds were in, I said, why is the market consolidating? Go back and look at Twitter. I tweeted it. It's there. The bonds are in a range. Until the bonds leave that range, all markets will be in consolidation, because interest rates are what makes the world go round. And then after that narrative is set, then we can have a bias. So the bias is bullish here for dollar, bullish here. It's even bullish on this day, but not in the scheme that we would expect it to open and then buy it and go up. We're in that range now, that fair value gap. So what we would expect is to consolidate or retrace, and does it support the low end of that range? And look at the body showing you that. That's a signature. That's algorithmic. So as a swing trader, you could use this day here as an entry, and then pyramid in here for a run into that using that implied dealing range. An implied dealing range is not a dealing range like this where we have a real high and a real low. Those are actual. We're looking for a price run from this low up to this order block on the weekly chart. Until it does that, that's an implied dealing range. We don't know if it's going there. Anything can happen. A bomb could drop somewhere. Some kind of a hack that hits the markets. I expect that's going to be used in the future, by the way. But that run here, that is a implied dealing range. It has not really manifest yet, but we're seeing with anticipation that that's where the draw on liquidity is. The initial one was here. So now let's go and add our fib to this low. I know this stuff is amazing, and I could talk about this stuff all day long. All right, so right there, from this low to that high, which is the weekly order block, what I'm showing you there is the range. Okay, it's an implied dealing range. If we have that, look at the levels I have here. 75, 50, which is equilibrium, and 25. And then here's the high. The high of the run, which is terminus, at the end of the run, if you're going to use this as your dealing, well, not dealing range, if your implied dealing range, it's where you think it's going to go. So before the candlesticks even form, folks, you could have this in your chart like this. It would look like this right here. Okay, say it's meandering around like this in consolidation, and you start doing your analysis and you think, okay, what happens if we were to break lower in the pound? I'm sorry, if we were to break lower in the bond market, then that would give rise to the dollar index. High, low is your dealing range. Weekly fair value gap. Okay, that sets the stage for, if we're going to go higher, I'd like to see us remove this bearish stance that I hold on dollar during this time period. If it goes to here and goes above it and treats it as support, I'm not bearish on dollar. Go back and listen to my reviews. It's there. It wasn't word salad. It was very specific. But because we have this range here, we can take the low up to that weekly order block. Let me take the fib off and show you what you would be doing. This is what you could do here. I know some of you are brand new or watch. This is the first time you've seen this. Oh, this is hindsight. Go back and look at the reviews, folks. I was talking about all this stuff before it happened. I didn't give you this much of a breakdown, but I'm teaching you how to grade a price swing, how to anticipate where the next setups are going to form before they ever come into the chart. Forget supply and demand. Supply and demand requires the candlesticks or ranges to be in the chart. I'm going to teach you where they will form before they will form. Where do setups form? Show me how to buy and sell, Michael. Where are these PD arrays that work? How does it look in the chart before it gets there? What should I anticipate? How can I trust this stuff? Okay, let's do some time travel. Low to high, that's terminus. We have 25%, 50%, and 75% of the range. We require bonds to do one or the other, go up or go down, and leave that range I showed you on its daily chart. It broke lower. Not yet, but now we have let go of that, Michael, good grief. We have a shift in market structure right there. On the bond market, we qualified it with it going lower. It left its range going lower. That's going to give momentum to the upside on longs. Not that that's driving price, but that's setting your mindset in motion for it. We're in a buy program for dollar. So right away, we can anticipate somewhere in here, in this area, there's going to be some kind of accumulation. We consolidate here, and then we run. What does that make that right there? That's a fair value gap, right? Yeah, it's a fair value gap. More specifically, it's a breakaway gap. What is it breaking away from? It's breaking away from this consolidation. It has a shift in market structure. So this is your gap to trade This is the gap that you use to qualify as a breakaway gap, and then trust it's likely going to draw here, which is why I communicated to you. I said, we want to see this traded to, but I'm more interested in trading it up above it and coming back down and finding it as support, which makes it an inversion fair value gap. Now, I know if you're new, this sounds like a whole lot of stuff. Please just give me an overbought, oversold indicator and a moving average to follow. That's okay. You're not ready for me. That's all that it means. It doesn't mean that you can't learn this. It just means that you're not ready yet. Go watch somebody else. There's lots of other people that will entertain you and tickle your ears. You want to learn how to read the markets and really know what to do? Come back here. 50% equilibrium. Look where that fair value gap forms. Equilibrium. Ooh. What do you think's significant about that 50% level? And why didn't that gap fully close? It's a measuring gap. That fair value gap is a measuring gap. This low, this candle did not come to that candle's high. Uh-oh. We're seeing some context and narrative that just ain't in your books, baby. That means we can anticipate this price run here to be duplicated to the upside. Meaning, let's say we have this low is lower than that low and that low, and relatively equal to that one. We don't need this low here. We want to see the energetic price run. That's this one here. So where does that root price run begin? That low right there. So if we take that and measure it up to the high of that fair value gap, why that? Because that's the highest range. So you want to use that as your base point. Extend it from there. And you're putting it right on that same, I'll show you exactly what I'm doing in a second. Give me 1 second. I'm taking that high of the fair value gap. Here's the low of the fair value gap. I've duplicated that. So we now are seeing a range that's projected to go above this gap, which is why I was saying I want to see it go through it and then treat this gap as support. This was the draw. Now, it does go through it. Here's the upper 25% of it. Okay? It comes back down, immediate rebalance, 1 day delay. Remember when I talked about immediate rebalance? It's that next day or the very next day after that. Then you'll see the price run. There it is. Goes into the weekly order block, trades up into the daily order block, and the weekly mean threshold order block. Trades all the way up into those levels. Each one of these targets, okay, you're looking for price to continuously reach for them. You don't want to think that, okay, this is my first objective, and then once it trades there, go try to find some other setup in another market. No, you want to stick with it. Does it continuously keep digging into that? The next level, it does. Okay, the last review I did, I said, okay, this is the level we're looking at next. We want to see if it wants to reach up in that 104.54. It did. Every time it was digging higher, I literally watched people on social media bitch about their long positions in euro failing. This is the reason why it kept going higher. If the dollar's going to go higher, euro is going to fall. It's going to go lower. And then it drops from there down to some random level, which is, let me get this off here. Down close candle inside the weekly order block, weekly fair value gap, which is now an inversion fair value gap. This is the treatment of it on the daily chart. It comes down, hits it. Look at the reaction there. Do you think you could have took shorts in euro dollar on that right there in the last 1 to 3 days? Well, let's go over to euro dollar. Finally, get the hell off of the dollar index. Get to something that makes sense. We don't trade the dollar around here, right? So here is the euro dollar. And this is the daily chart. And this is the immediate rebalance right here on euro. And this was the fair value gap I mentioned that we would draw down into up here. We drew down into it. And then we rallied one more time into this up close candle right here. That's a bearish order block. Oh, here we go with the hindsight. Folks, listen. Your surgeon that cut on you and did your surgery before he got his license, he was cutting on cadavers. That means dead people that can't sue you. So that's hindsight too. He's looking at something that is a safe. He doesn't want to do exploratory surgery on you while you're living and try to do new things. They have to do those things clinically in cadavers, bodies that have been offered to science for research. You need to go through these exercises yourself. Look